All right, things have moved on a lot since the craziness in the market a couple weeks ago to months ago.
Over the last 2 years.
Why is that guy interrupting me? And things have calmed down a whole lot, and that has been shown with volatility coming in a great deal. Now we've got the VIX down below 16, and we had expiration today. So yesterday was the one day of the month when UVXY and other VIX ETPs are only made up of one future. The entire ETPs were made up of just the March VIX future yesterday. Today, they will sell a certain portion of the March future and buy a certain portion of April futures to replace it. And when we look at the term structure, it has gone from us being in a steep contango, well, relatively steep contango of over 7% yesterday, to being very flat. And when I pull up the chart behind me here, it's not going to show yesterday's because yesterday is gone. But it's going to show that we're less than 1% in contango right now. Now, why is that the case? Let's pull in here the ProShares website, and that will show us we've got a swap in there, but the majority of the notional exposure now is just in that 319 expiration future. This swap is going to act, most likely it's just going to act exactly like UVXY would and is going to adjust appropriately every day. That's the way many of these swaps are set up. But if you notice, all of the futures, there are only futures that expire March 19th right now in UVXY, and that will be true for the other ETPs as well. Now back to the VIX term structure chart, you can see to my on the left side there, we've got 1 month 1675, the other month 1685, a difference of 10 cents, and very flat in the term structure. Now, why is the case that yesterday we had huge contango, but these months are not anywhere near as close to spot or even in contango very much? Well, the reason is that as we get closer to expiration, the front month future gets pulled more and more towards spot until on expiration it should be right at spot. However, when you've got a future like this March one, which is now the front month, that has 30 days to go, there is nothing that's really pulling that future towards spot with extreme urgency. There's no way to sort of arb. If this was the SPX futures, then people could, what they could do is they could sell futures and buy baskets of stocks against them until there was no space between the cash and the front month future other than interest. But there's no such mechanism to bring things back in line for the VIX, and thus these futures are going to float around at will. Now, what it tells me right now, that the reason that that future is not going lower is because the market is telling us that maybe the VIX will be higher than 1572 coming up soon. And there's not a lot of pressure of people selling that level right now. And it could be a whole range of different things as far as supply and demand issues affecting the future, but they're not tied to spot. That's the takeaway from this. And thus, they'll float around a little bit more. Now, we would like to see this morning contango for the short vol people because it would be decaying more rapidly if it was morning contango. And I suspect if things stay like this, that future is going to slowly get pulled more and more down towards spot as time goes by. If spot were not to move from now for the next month, if it were just to stay 1572 for the next month, that future would slowly get pulled down to spot over time. However, that spot price will move around, and if it does go lower, these futures will go lower as well. But you'll notice as we get 1, 2, 3, 4 days out from expiration, the front month future will be right next to spot most of the time because it's pulled down there for expiration. because in the end, the options are going to expire based on that spot price. So this isn't surprising. We see this all the time on an expiration. Generally, in 2017, we were seeing more of a distance between spot and the M1 future. The new M1 future, that being March right now, right after expiration, we would typically see about 2 points between spot and the M1 future. So that future is pretty close to spot right now if we look back historically. However, the term structure is just very flat right now, and that's just the way it has been for a while now. Now, 1570 sounds pretty low on the VIX. Will the VIX go lower next week? I don't know. How should I know? There's a big misconception that somehow market makers and market participants who either have more experience or have more money behind them or are pros have some sort of inside knowledge about what's going to happen in the future. And the more you trade, the longer you trade for as a professional, the more you realize that nobody knows what's going to happen. If people tell you they do know what's going to happen, they're making a guess. So I can't tell you what's going to happen next week any more than you can tell me. Sometimes we get we form a bias where we really feel based on just all the information available to us that things are going to move one way or the other. But that is not something that's like easily quantifiable. So I don't know what's going to happen next. I can go with you and we can look at the VIX chart, which I was just doing recently. By recently, I mean like a few minutes ago. And if we look at like a 1-year VIX chart, and I get out of the way here, we can see that we are well off the highs of 3620, but we're still above what the level that we were at before October of last year. So it could continue to fall, of course, but it wouldn't be surprising if this took off and went a lot higher right now as well. So that's where we kind of stand. If you're new to trading the VIX and VIX ETPs, then welcome to the party. It's a fun little spot to be in, and where the short vol traders develop their edge, quote unquote edge. You'll hear every trader has an edge which allows them to make money. That's their little leg up on everybody else. Well, the edge that comes out of trading the VIX comes from the futures being in contango. And if we go back once again to our chart here, I like to go through this every little once in a while because we do pick up new people from time to time. We go back to our chart here. UVXY is based on a mixture of these two futures that are off to my left. The March and the April future. It's always just based on the front two futures. Right now, UVXY is composed of almost all March and then a little bit of April future. What they always have to do is maintain an average expiration of 30 days out. So when March is 30 days out, we can use just all March futures. When March is 29 days out, so then yesterday March was 30 days from expiration. Am I getting that right? Let's see. So February 13th, yesterday March was 30. I was trying to figure out, sometimes it's like 29, sometimes it's 28 in the month. It just depends on the month. But March was 30 days from expiration yesterday. So the ETPs were composed of all of the March futures. Now a day goes by. If you just used all March futures, well, it's not following the formula because now you're predicting the VIX 29 days out. So you need to add a little bit of the April futures, because if you add April futures that are 60 days out or 58 days out, if you have a couple futures 58 days out and the rest are 29 days out, you can average once again to 30 days. And so we sell a couple futures or a certain percentage of the futures for $16.70, and we buy them back for $16.80. So sounds like a bad deal. You're selling something for a cheaper price than what you're paying for the other one. And you would think, okay, well, when I do that, I'm going to end up losing money, right? And thus VIX is thus UVXY is slowly going to go down because I keep selling something cheap and buying something more expensive in its place. Well, that's not exactly the way it works. That intuitively we can tell that we're going to be decaying based on that. But the actual mechanism behind the way things work is that you are using an equivalent dollar amount. So if you're selling X amount at 1670, you're going to be buying slightly less futures for 1685. So it's going to be a zero-sum game. It's not like, okay, I have 5 futures to sell for 1670, so then I'm going to have to buy 5 futures back, so I'm going to have to pay, I'm going to need a little bit more cash to add to the cash I got to buy those same 5 futures paying 1685. It's actually that you're going to sell a certain dollar amount at 1670, and then you're going to buy a little bit less futures because each future costs a little bit more for this April one. So you're not losing or making any money in this actual transaction, but you are just changing the future, your portfolio, to having a little bit of these April futures. And the reason why these are eventually going to lose money is as time goes by, these futures, and I need to get my little pen out to always show this, as time goes by, these futures are falling down towards spot. So if I get my little pen out here, I can draw an arrow and say, over time, these are falling all the time towards spot. And they never, as spot stays below here, they never actually get to spot. If spot were to stay where it is right now, these would never really get to spot. It's just as time went by, they'd slowly roll out to the next future, which is a little bit higher up, and roll out to the next future is a little bit higher up, and they're always falling towards there, but they never get there. And that's what is the mechanism that allows UVXY to fall forever, and they just keep reverse splitting it. Now, stuff moves around, and a wrench gets thrown in it because spot moves around. It might go above the futures for a sec, go back down, but as long as the majority of the time you've got this sort of continuous falling thing going on, that is where the edge is derived at trading VIX products, shorting volatility. I hope maybe that sheds a little light for some of you who might be new at this. Now, there's all kinds of other aspects to this game, and by understanding the mechanisms involved, you can take advantage of different moves. So, for example, we do get a spike in volatility. Maybe the term structure completely flattens out, and maybe you can ride the wave. Maybe if volatility is really low, even though you've got this pressure coming down on you, the fact that vol is so low and that it spikes higher, it will overcome that pressure. Because remember, this contango of these futures slowly falling is a long-term process that happens over weeks, months, etc. The VIX move in a day or two is only very, very small are going to be affected by contango forces. But as contango builds, it becomes more and more of a factor. Right now, we see 0.6% contango, which isn't that much. But if contango is 5%, contango is measured per month, not per year. So 5% contango is really 5 times 12 per year. 1% contango is actually 12% per year. And thus, as this number builds, it starts to become more and more of a factor. All right, so right now, as I said, we are you could say we're kind of in the middle of the range, you could say we're low in the range, or you could say we're high, depending on your point of reference. But I would say we're in the middle here. If you polled some people in maybe, let's say, January of this year, a lot of people were saying, oh, the VIX is never going to go below 20 again. 20 is the average. It's going to stay here. And a lot of people would not have predicted it would have even gotten this low. However, now that it's gotten this low, I'm sure people's opinions are sort of changing on this whole thing. That's kind of the way it works in the market. Everybody piles on to one opinion, and then a lot of people like to prognosticate, and based on what happened yesterday, they try to predict what's going to happen tomorrow with this huge amount of authority. But you never actually get back to go back and tell them they were wrong after that date, because somebody will say, the market's going to be down tomorrow. If they're wrong, you won't hear from them. If they're right, they'll come back and say, I told you so. But there's nobody actually really keeping score. So I always wish that those people who seem to feel the need to prognosticate would be held to like a scorecard. Like if every time you can say this is going to happen, it doesn't happen, there should be a little bozo next to your name or something like that. Because you'll notice most pros will not tell you what's going to happen ahead of time because nobody knows what's going to happen ahead of time. That doesn't change. And I know people that are just starting out in the markets, they get intimidated by the numbers and stuff, and they're intimidated to the point where they actually believe that somebody who's not intimidated knows what's going to happen ahead of time. Nobody knows what's going to happen ahead of time, so don't get taken in by that. And don't get taken in by somebody who shows you how they're making all this money, because somebody else making money it's very hard for that to osmosis come into your account. And it's very, very hard to just have somebody say, oh, I'm going to buy this, and then you buy it, and then it works. And then they say, I'm going to sell this, and then you sell it, and it works. It just doesn't, the game don't work that way. The way the game works is you got to kind of come up with your own ideas, check them out, give them a try, and by actually executing trades and doing stuff, you're gonna learn on your own. You're gonna have your own journey, and you are gonna get better at certain things. And the hope is my hope for you is that you find a little niche that you're into that is profitable for you. One of the worst things that can happen to someone is they're very successful right out the gate because they sometimes mistake luck for skill, and that's a bad place to be in. I've been in that place before. The market will humble the biggest, strongest person out there and the one with the most money. So that's why a lot of traders are superstitious, because there is an element of fortune here for everybody. No matter how much people might not want to admit it, there is an element of fortune out there for you. So I've been doing this game with calendar spreads lately, and I've been doing it in the stock ISRG, I think. No, I'm sorry. It's not ISRG. Sorry. I've been doing it in this stock called ICPT. And ICPT. And there's a disparity in the volatility between all the months here, and thus, if you look on the right side of the screen, it's going to show the volatility for each month. So front month is 256 vol, second month's 235. Now, in a stock that's over $100, disparity of several points in volatility represents real money. So I've gone out a couple months here. I'm dealing with like between 64 days to expiration out to like 219 days to expiration. And the price is far out here. If you've got a disparity where 1 month is the farther month's way lower than the nearer month, you can have these options for 2 months worth almost exactly the same as one another. However, I know that as we get closer to expiration, the ones that become the near month, as they get nearer and nearer to expiration, are going to become worth way less than the month that right now they're worth almost the same as. So if I can buy a spread for some of these put spreads, the 95 put spreads were the midpoint of the screen was like 70 cents. If I can buy a spread, it's got two options. One's like $35 and the other is like $34.20 or something. If I can buy that spread for only 70 cents and the most I can lose is 70 cents, well, if the one option stays around 34 and the other option goes to 0 for expiration, then that spread can go from 70 cents to $30 or something. So I like these trades. It's kind of a weird situation in that these are completely illiquid. So I don't recommend you necessarily jump over the cliff with me on this one, because it's a kind of a long-term trade that it has some risk associated with it. But just to let you know what I'm playing around with right now. As far as UVXY goes, we've had a big run down. I do think it will take out the lows at some point soon, but I'm kind of I lost that word. I don't want to sell into it right at this moment without catching onto a pop or something. I did catch onto a little pop last week, and I can pull that up here. This little pop up here is what I kind of jumped into. This little pop here. But I would recommend if you are going to jump on the short train here that you do wait for a little pop to jump on the short train. But as we just talked about right now, less than 1% contango, so there's not a huge amount of edge to shorting this, but we do anticipate as long as the market kind of stays at what it's doing that this contango will build up back again to be over 5%. So it seems like things have calmed down and the market is chilled out a little bit. We'll see what happens with the political situation with a possible other government shutdown. I think a deal was made, and the market seems to seemed to be saying for a few weeks that a deal was definitely going to be made, and that the government political stuff was not a concern too much of the market because volatility has really come in and it stayed in. So we'll see what happens, but seemingly the market has chilled out a lot from what it was doing in January. That's bad news for some people that like to play the volatility, but for short vol people, it's probably good news, and we probably should see that $35 all-time low on UVXY get taken out sometime in this summer session coming up. I'm already in the summer, even though it's just February here on Cape Cod, but a lot better February than last February. I'll tell you, last February at this time, a lot of us were smarting because of that Volmageddon. It's just a little over a year since that Volmageddon thing, and it hurt. It smoked many of us last year, and it definitely ruined my whole year last year. So happy to be not in a Volmageddon this year at this point. And my risk is a lot smaller than it was last year because I learned my lesson by getting smacked around in volatility. So I think that we'll be adding some new people to the short vol trade coming up as contango continues to build. But there's also people that are a little bit more wary after the fireworks of last year. Thank you for joining me today on the Short Vol Show Live. Please check out Gorilla Trades. I'm not an expert stock picker, but Gorilla Trades is. Link in the description. They have a subscription for a year, and it will give you all these ideas, not just in the stocks, but in options. They have a great track record of picking winner stocks, and it's really a great jumping off point to start trading. That you start with the premise that one of these stocks is going to go higher, and then you can start to craft options trades. You could start by just getting along a little bit of stock, but it really gives you a starting point to get engaged with the market and start doing stuff. So check out Gorilla Trades. It also is my sponsor, so I would love it if some people would get subscriptions. It would make it look like it's a good thing, them sponsoring me, which we all like. Anyways, new interviews coming up soon. Got some in the hopper, so stay tuned for that. Thanks for watching. Please like and subscribe. I want to get more subscribers this year and get it going. And thank you for all your support out there, and I will see you in the next one. Thank you for watching the Short Vol Show Live.